Hello everyone, welcome back to our NSE Market Intelligence Report, where we decode what institutional money, futures positions, option activity, and short selling data are telling us about the market. Today we have a very interesting setup. While the overall market appears stable on the surface, underneath there is a significant divergence between sectors. On one side, PSU banks and selected financial stocks are witnessing strong accumulation. On the other side, the IT sector is facing aggressive short selling and fresh bearish positioning. Let's dive into the data. The most important observation today is sector rotation. Money appears to be moving away from IT and into banking. Whenever institutions rotate capital from one sector to another, it often creates strong trending opportunities. The futures data clearly shows this shift. Banking stocks are witnessing fresh long positions. IT stocks are witnessing fresh short positions. This is the primary theme of today's report. Let's begin with the strongest bullish area of the market. Canara Bank recorded one of the highest increases in open interest while simultaneously moving higher in price. This is a textbook long build-up. UNIONBANK also showed strong participation with over 2% price appreciation and fresh futures accumulation. Punjab National Bank continues to attract institutional interest. State Bank of India remains strong and continues to witness positive futures positioning. Bank of Baroda also joins the list of bullish banking counters. When multiple stocks within the same sector show long build-up simultaneously, it usually indicates sector-level institutional buying rather than stock-specific activity. This makes PSU banks one of the strongest sectors to watch in the coming sessions. HDFCBANK deserves special attention. The stock recorded fresh open interest additions while maintaining positive price action. Whenever a heavyweight banking stock attracts fresh longs, it strengthens the bullish case for the entire banking index. This is why HDFC Bank remains one of the most important stocks to monitor going forward. Now let's move to the weakest area of the market, the IT sector. WIPRO experienced a massive decline of more than 6%, while open interest increased significantly. This indicates aggressive short buildup. Fresh traders are entering bearish positions rather than exiting existing longs. TCS delivered an even stronger warning signal. The stock fell sharply while open interest increased. This is one of the strongest bearish patterns available in derivatives analysis. ITC also witnessed fresh bearish participation. The combination of WIPRO, TCS, and other technology names suggests that institutional participants currently expect weakness in the IT space. Until we see meaningful short covering, traders should remain cautious about aggressive long positions in IT stocks. One of the most interesting developments today comes from NHPC. The stock moved higher while open interest reduced sharply. This is not fresh buying, this is short covering. What does that mean? It means traders who were betting against NHPC are now closing their bearish positions. Short covering rallies can move very fast. However, it is important to remember that short covering is different from fresh accumulation. For a sustained bullish move, we would like to see price increase along with fresh open interest additions. Nevertheless, NHPC remains one of the most interesting stocks for tomorrow's watch list. Vodafone Idea also experienced notable short covering activity. Similarly, ONGC displayed signs of traders exiting bearish positions. These stocks can remain highly volatile over the next few sessions. Traders should closely monitor volume and open interest changes before entering new positions. The NSE short selling report highlights NHPC as one of the most heavily shorted stocks. This becomes especially important when combined with today's short covering activity. Large short positions followed by short covering can create powerful upside moves. This is exactly why smart money analysis requires combining multiple data sets rather than relying on a single report. Let's move to the options market. The highest call open interest concentrations are visible around the 24,000 to 25,000 zone. This creates a resistance area. Meanwhile, significant put open interest exists around the 23,000 region. This forms a support zone. Therefore, the options market currently suggests a broad trading range between 23,000 and 24,500. A breakout above resistance could trigger additional bullish momentum. A breakdown below support could invite fresh selling pressure. Pay close attention to watch list stocks. If we summarize today's intelligence report into one sentence, institutions are accumulating banking stocks while aggressively shorting the IT sector. That is the dominant theme emerging from today's NSE derivatives and positioning data. For tomorrow's session, PSU banks remain the strongest area to monitor. IT remains the weakest sector until evidence of short covering appears. As always, follow price action, manage risk, and never trade based solely on one data point. Thank you for watching. If you found this analysis useful, please like, subscribe, and share the channel. See you in the next NSE Market Intelligence Report.